going to talk you through the top things that you can do to get a mortgage. Things that your broker, your bank manager, and your friends probably either don't know or don't tell you. I've been in finance for over 30 years. I've been a bank manager. I've done a lot of roles within finance. And my goal is to make sure that everybody watching this video understands how to get a mortgage. Even if you don't come to me, I want to make sure that you understand the process. But before we go on, make sure you like and subscribe. Make sure you scan the QR code, because this is going to give you everything you need. But you need to keep in mind that everything is inclusive of the other things. So you can't just look at one concept and use it in isolation. So first and foremost, you know I love a good slide, so we'll be going through the slides. I've written a book. It's called A Mortgage is a Really Big Loan, but don't be put off by the title. It's not just about mortgages. It's about everything to do with finance. So I'm here to talk you through the mortgage process, but it also will involve things to do with your finances. The top mistakes that people make when getting a mortgage, especially people that are on skilled worker visas or first-time buyers, because they've never been through the process before. So rightfully, they will speak to friends and family who are well-intentioned, but 9 times out of 10, they don't know what they're talking about. And what I mean by that is every mortgage is like a fingerprint. Every mortgage, every home, every individual is very different. So the things that they could apply to their mortgage or apply to them may not apply to you. So it may mean that the information that they're giving you is wrong. So don't listen to friends and family. You should get a referral from them for your solicitor, for your broker, someone that they've worked with recently and someone that they were happy with. But if they're just giving you advice and they're not a mortgage professional, you really should take that with a pinch of salt. And definitely don't get mortgage or medical advice from your barber. The next mistake that people make, and I have to caveat this, is the next big mistake that people make is obsessing over rates. It's July of 2025 right now, and in the next 18 months, you have millions of people coming off fixed rates from when the rates were really low. So they were at 1.9 or thereabouts. So anything in today's market is going to seem super high to them. The reason why I say don't obsess about rates, look at your payments, is because if you've gone to a broker that you know and trust, your broker is required by law to give you the best rate based on your circumstances and your needs. So what you will find is quite often there may be better rates out there, but you may not qualify for them, particularly if you're on a skilled worker visa or if you have a low deposit or credit issues. So speak to your broker, tell them what your budget is, and your broker will help you find the best rate that you qualify for. It doesn't mean that it's the best rate that's out there. A lot of people will call me and they think it makes them sound really smart when they say, well, I saw that the Bank of England just reduced rates. Just because the Bank of England reduces base rates, it doesn't necessarily mean that mortgage rates will go down. Sometimes the exact opposite will happen. Sometimes the Bank of England will lower rates. And I've even had instances where I'm dealing with lenders and they've said that they've increased their rates a little bit or they've kept their rates the same simply to manage the influx of applications. So don't equate the Bank of England base rate with the mortgage rates going down, although we always want mortgage rates to go down. But in short, don't obsess over the rate. Your broker will find you the best deal with an affordable repayment that will keep you out of trouble. Because if you get a lower rate, quite often it may mean that there's more product fees on that particular product. So as much as we want to get you the best rate, don't obsess over rates, and you have to trust your broker. If you don't trust your broker, then you shouldn't be working with him or her. Next up, credit profile. And I know I say credit profile and not credit rate. The reason why I say credit profile and not credit rate is because there's a misunderstanding of how credit works. And a lot of times people look at their credit score that is sent over to them in their banking app. we as mortgage brokers are looking at your credit profile. So we need to know if you have any missed payments, late payments, CCJs, or defaults. If you've ever had any repossessions, these are important because someone may have a high credit score. However, in the last month, they maybe made a late payment, or within the last 6 months, they've made a late payment. A lot of lenders will exclude people that have had a missed or late payment within the last 3 months from their top tier products. So when your mortgage broker asks you about your credit profile, what they're asking about is how you pay your bills. Do you have any missed payments, late payments, CCJs, or defaults? And on that note, make sure that you manage your credit properly. So as I said, it's your credit score, not your credit profile. So check your file, your credit score, or your credit file at least once a year. I would recommend checking your credit file at least twice a year. And the reason why I say that is because quite often when people come to me, probably 9 times out of 10, their credit score does not align with what they see on their credit report. We recommend using checkmyfile.com. That's checkmyfile.com. You can get a free credit report from Check My File. I would suggest that you do hold on to the account. However, if you cancel the account within, I think, 14 days, you don't pay anything, but you do get your credit report. The Check My File credit report will show you everything that has happened in your credit history. So it will show you if you're on the voters roll or not. It will show you missed payments, late payments, CCJs, defaults, and it's easy to read even if you're not used to looking at credit reports. But check your credit report at least once a year. I would recommend twice a year. Should you accept credit card increases? If you're trying to build your credit profile, then you need to manage your credit limits. I have a video that talks about that in more detail. Should you pay off credit cards? You should consider paying off credit cards and reducing your outgoings before you start the mortgage application. You'll hear me say this a lot. You should always speak to a mortgage broker at least 6 months before you think you're ready to purchase. The reason why you want to speak to someone at least 6 months before you think you're ready to purchase is because there's a lot of things that a mortgage broker can advise you on that will go into effect, but it might take 3 or 4 months to show up on your credit profile. So if you speak to them 6 months in advance, they can give you a game plan on how to make sure that you get the best mortgage that you qualify for. And your statement date versus your due date, just be mindful if you purchase something on a credit card and you pay it off immediately, it may not boost your credit rating. So be mindful that it's your credit profile and not just your credit score. We've asked before, and we've discussed it before about CCJ. So a CCJ is a county court judgment. And my best advice is someone that worked in collections for over a decade. If you have a dispute with a creditor, even if you think you're right, if it's getting to a point where you're going to get a CCJ or a default, pay it and then dispute it. I have dealt with countless clients who, out of principle or out of pride, because they were right about the situation, have allowed a CCJ to go on their credit profile. £100, £200, it's a utility bill, it's a mobile phone bill, and this has impacted their ability to be able to get a mortgage. So for the sake of £200, this person is not able to get the best rate on a mortgage. So it's ended up costing them either thousands of pounds or delaying the process of applying for a mortgage. I had a client not too long ago who had a £200 utility bill. I'm not going to say the name of the company that they had disputed, but they didn't pay. It stayed on their credit profile and it prevented this person from being able to remortgage with a top tier lender. So it cost them a lot of money. We'll ask you if you've missed payments. So a missed payment will show up on your credit report. So make sure that when you are looking through it, you acknowledge or you can see any missed payments. But in the mortgage process and leading up to it, do not miss any payments. Do not make any late payments. And your debt to income ratio. This is an important thing. especially for regular people like us. Quite often, people have credit cards, and their credit card limit might be, let's just say, £5,000. And they have an outstanding 4,500. So that means they're using 4,500 out of a £5,000 limit. Now, they make the payments every month. They don't miss a payment. They manage it well. But what the lender will look at is your debt to income ratio. I've had clients that have never missed a payment, have very strong credit scores, but because of the amount of debt they haven't qualified for the top tier lenders. I stress this point a lot. It doesn't mean you won't be able to get a mortgage. It quite often just means you'll need to go to a specialty lender who, in most cases, is going to charge a little bit more on the interest rate. But that's not something that should put you off, simply because it means that at least you can get the mortgage, and then you'll be able to pay that mortgage regularly, reestablish your credit profile, and then when you go to remortgage, you'll be able to get a more preferential rate. The other mistakes that people make, and this is about income, is the wrong income structure. When I had one of my first branches, when I started off as a branch manager, we got an audit. And there were a lot of things that I didn't do well on the audit with. And the auditor spoke to me. They could see that potentially I had done the things, or potentially an activity had taken place. But what they told me is what I tell anybody applying for a mortgage. If it isn't documented, it didn't happen. So if it isn't documented, it didn't happen. If you're getting paid cash in hand and you're not paying taxes on it, then you cannot use that towards your affordability. If you're getting paid cash in hand, the bank doesn't really want to know, but they may question why you're getting paid cash in hand and why you have an income that you're not paying taxes on. So as you prepare for your mortgage, make sure any income you have is going through the proper channels, that you're paying taxes on it. That way you can use it towards your affordability. Another part about the income structure is the fact that if you have a second job, not all lenders will take the full income from the second job towards your affordability. I'll say that again. You may have two jobs. Let's just say one job you get paid $25,000, the other job you get paid $10,000. It doesn't mean that the lender is going to view your income as $35,000. There's a lot of caveats in that. So one of the things that they're going to look at is that sustainable? Another thing that they'll look at is how long have you been doing that second job? Banks aren't dumb. So you can't just go out and get a part-time job to boost your income and expect the lender to use that second job income towards your affordability. Sometimes lenders will want to see that you've been at that second job for a year or more. Sometimes they'll take part of the income, but not all of the income. There's lots of different scenarios. So this is why you want to speak to a mortgage broker at least 6 months in advance of applying for the mortgage. That way they can talk you through and do a full mortgage affordability assessment. They'll be able to explain to you what income can be used and what income or percentage of the second job can be used. And don't forget, if you have a main employer, your main employer may need to give you permission to work a second job. So in some cases, I've seen lenders request the contract from the main job and check to see if the main job is given permission to work the second job. So your income structure has to be correct. Another thing to keep in mind is if you paid through an umbrella company. Some lenders don't like to deal with applications where the person is paid through an umbrella company. If you're a contract worker, there are lenders who love contract workers, and I love working with contract workers, but there are lenders who assess the contracts based on how long have you been doing contracts, at what point of the contract are you, how many times have you been renewed. There's lots of caveats. So again, getting a mortgage is pretty straightforward, and so is the criteria, but you have to look at every single bit of criteria because not every lender works with every income type. So make sure your income structure is correct. Some of the things you can do to boost your income is to get a raise. Now, that might sound easier said than done, but quite often people don't ask for raises. So maybe if you go and ask for a raise, you might get the no, but they might give you a game plan on how you can increase your income. They may suggest a course or a certification that you can get in order to increase your income, which will give you more affordability for a mortgage. Or you could start a side hustle that is documented and you're paying taxes on the money. So if you have a skill that you're really good at, you can bake, you can build websites, whatever, why not create a side hustle, set up a side business, make sure you file your taxes properly, then you can use that income towards your affordability. And with side hustles, make sure that you set it up right. Make sure that you're running it as if it is a business, because it is. Quite often, people have passion projects that they call side hustles, and they don't run it in a way for it to be profitable. And therefore, they don't make any money. If you're going for a mortgage, the key things are your credit, your income, and your deposit. And a side hustle can be a great way to increase your income as long as it's documented, and your mortgage broker will advise how much of that income can be used towards your mortgage affordability. Another mistake is deposits. Remember, I said that you have your credit, your income, and your deposit. There are some communities where they have various different ways of saving money. So everyone gives one person some money a month, and then they share that out, and it goes through a cycle. In the West Indian community, it's called a partner. In today's world, please avoid these type of saving schemes. They are viewed as less than productive, and they're not something that banks want to deal with. So what I'm saying by this, if you are saving money, make sure you're saving money in a very transparent way, a way that complies with all regulations or laws. Banks are not dumb. Banks can see everything that you're doing if or when you provide your bank statement. So if they see multiple deposits being made by various people, they're going to ask about it. And they may ask to see that person's 3 months or 6 months bank statements. So what I would suggest, if you're looking to save for a mortgage, make sure that you do it the right way. The best way to do it is open a high interest savings account. You can go to Money Savings Expert and you can do your due diligence and find a savings account that will give you a high rate of interest. I'm not giving tax advice, and I'm also not giving legal advice. There are implications to interest earned, but make sure you do your due diligence and you can speak to an accountant who can advise you best on how to do that. But by having a high interest savings account, it will be more favorable when you go for your mortgage. So you get your salary, it goes into an account, you transfer some money from your personal account where your salary is paid in, and it goes into a savings account. Quite often, banks might need to see 6 months or even 12 months of how you came about your deposit. If you are getting a gifted deposit, some banks will only accept gifted deposits from friends. Some will take it from friends and family. Some will take it just from family. There's all kinds of different iterations of what they'll look for. So if you have a gifted deposit, meaning someone is giving, not lending, someone is giving you money towards your deposit, you must let your broker know in advance that they know which lender will look at that gifted deposit and how much they will use. The reason why I say how much they will use is because some lenders will need you as the purchaser to put a minimum percentage in. What they don't want to see in a lot of cases is that all of the deposit has come from someone else. So speak to your broker, they'll be able to advise you. There are some lenders that will not accept any money that has come from gains in crypto. So speak to your broker, they'll be able to find a lender who will, because there are lenders who will accept crypto as a deposit. I talked about the cultural savings schemes, so the partner. So avoid those. Keep in mind, and this is a discussion that I have quite regularly with people, is you're not actually benefiting from it unless you're not a disciplined person. So if you're a disciplined person and you could put that £1,000 a month in a savings account as opposed to transferring it to someone who then at the end of that 12 months or whatever the period is, they just give you back the money you've put in. Avoid that. It's not good. It's not going to help you with your mortgage. It's going to cause more problems than it solves. And if you speak to a mortgage broker at least 6 months in advance, they'll be able to talk you through the best way to save your money, to get your income together, and make sure your bank statements are clean. We talk about the proof of the origin of the money. This is very important. Money laundering is a very serious crime, and it's a big issue in a lot of countries. So banks want to make sure that the money that you are using towards your property purchase has not come from illegal or illicit sources. So by having your salary paid into your current account and then paid into a savings account, you demonstrate where the money came from. You will usually be providing at least 3 months worth of bank statements to the bank. And I, as your mortgage broker and someone who's been looking at bank accounts for 30 years plus, I have a forensic view. I can look at someone's bank account and pretty much assess who they are, where they're getting the money. So don't think that you can just fix it for 3 months. Because I've seen instances where people have tried to work around the system, which I don't advise, and then the lenders come and ask for 12 months worth of bank statements, seen payments or lump sum payments going in, and said, well, where did that come from? And asked for the bank statements from the person who transferred that money in, and no one wants to give you their bank statements. So just avoid it. You don't need to do it. Specialist lenders are out there and they will work with most circumstances as long as the source of funds are legal. Another thing to do is to be deliberate and protect your credit profile. So these are just some hints and tips on how to prepare properly and make sure that your mortgage application is strong the first time around and you're placed with the best lender. Maximize your taxable income. That means going out and doing a side hustle or a side job, making sure that if you're doing a sole proprietorship, that you are paying taxes properly, that you're accounting for your income correctly. I'd always suggest if you're running a business, have a separate business account. Do not commingle your personal and your business. Keep them separate because it will make it a lot easier for your accountant and it will make it a lot easier for your broker. And as I said, find a high interest savings account. You can go to Money Savings Expert and find one. You put the money in there, and there's different stages that you can have as far as how your income is, how your interest is paid out. I have to repeat, I'm not giving tax advice and I'm not giving legal advice, but these things will help you get the very best mortgage and make sure that you're positioned well to be able to get a mortgage for your first home, even if you have a skilled worker visa or if you're a first-time buyer. Don't forget about the additional costs. And these are all things that go into getting a mortgage. I was once told, nobody wants a mortgage, people want a house. So you don't come to me because you want a mortgage. You come to me because you want a home. And in order to get the home, you need to get a mortgage unless you have very rich parents. So don't think of just the deposit. So the deposit is just one thing. And the great news is the deposit doesn't come out of your bank account until very close to you actually getting your keys. And this is why if you talk to a mortgage broker 6 months in advance, you've set up a high interest savings account. Depending on the amount of your deposit, I've seen people make enough in interest to be able to pay their solicitor's fees or maybe do some of the light refurb. Some of the other costs that are involved in purchasing your home, depending on what the purchase price is, and if you're a first-time buyer, is stamp duty. So keep in mind, you may have to pay stamp duty. If you're working with me, from the very first conversation, I'll help you calculate how much stamp duty you have to pay if you have to pay stamp duty. If it's a second home, you will pay a higher amount of stamp duty because it's a second home. Your solicitor. If you've watched any of my content, you will know I will say, do not cut corners on your solicitor. It's not saving you money. If you go and just get a solicitor because the estate agent recommended them or because you went online and you went to the very cheapest one, usually it's not going to save you money. You're making probably one of the biggest purchases of your entire life. And if you're going to determine who you work with based on saving 200 or 300 pounds, then you're probably making a mistake. Always work with a solicitor who has a good rating. And if you need this, not everybody needs this, but some first time buyers need someone that they can talk to. What you will find with a lot of these very inexpensive, and I use air quotes, inexpensive firms, you have one solicitor dealing with, lots of different cases. So the likelihood of you being able to speak to them is quite low. Some people don't need that. So I'm not in any way detracting from firms that use the online portals. For some people, it's the quickest and most convenient way of proceeding. But these are the things that you need to establish before you start the process. So don't just pick the cheapest solicitor. In most cases, I will recommend a law firm. And usually I'm recommending someone that I've worked with regularly and that matches that particular client's needs. So don't cut corners on your solicitor. Your broker, there are free brokers, there are free offers, there are expensive brokers. Some brokers charge broker fees, some brokers charge a percentage of the purchase. It's horses for courses. But at the end of the day, we are all professionals. We are licensed professionals. And a good broker will not only save you money, but they'll save you stress and save you a headache. We are required by law to tell you what our fees are in advance. So you'll know if you feel that we are worth what we say we charge. But you should always work with a broker that has been referred by someone that has worked with them. Now, I'm just a guy online, but I'm very visible online. I'm on LinkedIn. You can check my LinkedIn on the top of the screen and also in the description. So I'd love to be your broker. But if you're not working with me, make sure that you're working with someone that you trust, someone that you can be open and honest with. And another vital thing is make sure that they're honest. As in any profession, you have some people that just want the next deal and some people who want to build relationships with clients. I am the latter. I want to make sure that my clients are in the best position. Quite often, I'll turn clients away if I feel that they are either not ready, they don't have the right things in place, or if I cannot do what they need. And quite often, by what they need is what they think they need is what their friends told them they can get, either the rate or going to a particular lender. I have clients that approach me that have never purchased a home before who say that they want to buy from auction. I try to advise them against it. And if I don't feel that they have the right knowledge, the right network, and the right experience, I'll say, well, you might need to speak to another broker because I don't want to put you or your family at risk by purchasing through auction. That's just one example. Another thing, as far as money, you have to think about product fees. And what a product fee is a product fee is when you're taking out a mortgage, lenders may charge an amount for that particular mortgage product. That's what I mean by product. Some mortgage lenders don't charge anything. It can be a percentage of the entire mortgage. It could be a flat amount. Quite often, the costs are between 0 and 1,500. A lot of the times, the mortgage product fees are $999, but you will be told this before you proceed. That way, you can help select the product that is correct for you. Valuation. I talk about this a lot. Make sure you check out my video about valuation. So a valuation is not a survey. A valuation is the bank going or doing a desktop valuation to assess how much they think the property is worth. And the only person's opinion that really matters is the lender because they're the ones giving you the money. When you do a valuation, you may need to pay for that. Some lenders will have free valuations as an incentive. But the valuation can have three outcomes. It can have an outcome of overvalued. So you found a house, you had an offer accepted for $500,000. You start the mortgage process. The lender goes out and does the valuation, and they say, "Yep, we think it's worth $500,000." That's great. That's kind of the outcome that you want. The other outcome that could happen is they could go out and say, well, we think it's worth more than 500,000. Again, it's not an issue. It's not really going to cause any problems. What can cause problems and can cause issues is if you get what's called a down valuation. So that means the bank goes out or does a desktop valuation and they feel that the property is worth less than you've agreed to purchase it for. So they've gone out and said, we think it's worth 480 or 490. That's going to impact your loan to valuation. It may mean that you need to come out of pocket with more. It may mean that you need to select a different product. There's lots of implications to that, but make sure you check out my video that I did commenting on or reacting to Martin Lewis talking through loan to valuation, and that will give you a better understanding of what it is. So we're almost at the end. Here are some things that you should definitely do. Make sure you speak to a broker 6 months before you think you're ready to get a mortgage. That way they can give you a game plan on how to get the very best mortgage that you qualify for. They'll show you how to make sure that your bank statements are in the right order, your savings is in the right place and in a high interest savings account. They'll do all the work. And if you come to me, I actually do a full affordability assessment. So I'll tell you how much you can borrow right now. And if you're in a position to move forward right now, then that might be a surprise to you because you may think that you weren't ready. But I may have to say, well, we need another 3 months, 6 months, 12 months. I'll be honest with you, because at the end of the day, I want to make sure that you get the best product, that you're able to stay in your home, not just get the mortgage, but actually keep the mortgage. Another thing to do is make sure that you clean up your credit. So if you have any small balances, even if you have to take a little bit out of your savings, it might make more sense to have a lower amount towards your deposit, but have less outgoing. So if you have £300-400 left on a credit card, why not just pay it off? And the reason why you want to do that 6 months in advance is because it may take a couple months for that zero balance to show on there. But as we go through, when we talk about credit, make sure you check out that video. Don't close the card. Don't close the card. Hang on to the card. Don't close it, but clear it. And review your mortgage and equity. So this is for people that already have a mortgage and are looking to remortgage. You may find that you have equity in the property, but what you really want to establish is what loan to valuation you're at. So if your property is worth 100,000 and you have 15,000 pounds worth of equity, you might want to take some of that equity out to for home improvements or to purchase something else. But where you are as far as the loan to valuation will be very important as far as what product you qualify for. And don't forget, now this is something that is near and dear to my heart. I talk about it frequently because it's so important. Protection and insurance. I lost my grandfather, my grandmother, and my father to cancer. I don't wish that on anybody. And for a lot of my clients, they work in the care industry or they work for the NHS. But even if you don't work in the care industry or for the NHS, depending on the statistics, 1 in 3 or 1 in 4 people in their lifetime will have a brush with cancer. You need to make sure that when you're taking out your mortgage, you have the right protections in place. As mortgage brokers, we are required to make sure that we look at what you have in place and cover any gaps that you have. And I very rarely, except for when I was doing mortgages for people that work for like Google or Meta or one of these tech firms, I very rarely come across anyone that has enough protection in place based on their job. So at these tech firms, quite often they get, 4 or 5 times their salary, which might be 200,000 to begin with, death in service. They have great sick coverage, etc. But I always caution people that your employee benefits are just that. They're while you're an employee. So I don't know anyone in today's day and age who plans to work at the same place for the next 30 years. So if you're basing your protection on what your current employer is giving you, that might be a risky move, because when you leave that employment, you don't have that coverage anymore. I very rarely speak to anyone that when I ask them what their protection is, what benefits they get from their employer, that they know. They don't know what their death in service is. They don't know what their sick pay benefit is. They don't know if they have any critical illness. So don't do what most people do. And I'll tell you what most people do when the broker starts talking to them about protection. They say, oh, it's too expensive. Oh, it doesn't pay out. Don't do that. Take your protection conversation very seriously. That's not to say you have to take protection, because it's not a required part of the mortgage, but you should have the conversation seriously. We have to put a quote on your case. And if you need to go and shop around, definitely go and shop around, but don't do the compare the market type of scenario where you shop around and you just try to find the cheapest provider. One of the benefits of talking to your mortgage broker about your protection is the fact that your mortgage broker can answer questions. They'll be able to tailor a package to you as opposed to buying it off the shelf. I learned this very early in my career, and it's just human nature when people are purchasing insurance products, and it's not just for their mortgage, but when they're purchasing insurance products, they shop based on price. So they look for the cheapest thing. When their roof falls in, or they have a fire or a flood or a car accident, then all they're concerned about is the service. How quickly can I get this thing fixed? How quickly can you come and get me from the roadside? It's the same thing with protection. Make sure that you're getting the right protection. And if you can't afford the protection while you're working, then you definitely can't afford your mortgage if you're off work due to sickness or illness. And I'll say it again. If your only reason for not taking out the protection, or your only stated reason, is that you can't afford it or because it's too expensive, then you have to ask yourself, if you can't afford that premium each month, that's usually 5, 10, or 15% of your total mortgage payment. If you can't afford to pay that, what happens if you are off work sick? You definitely won't be able to pay your mortgage if you can't afford the premium. And as brokers, we're going to look at what your affordability is. Remember, before we even get to this stage, we've looked at your income, your outgoing, your savings, etc. I guess the last thing that I hear people say is, oh, my friends and family will take care of me. If I'm off work sick, I have friends or family. Sometimes people say savings. That's easy to resolve because you don't have savings, because you probably used your full savings in order to purchase the home. So let's not have that conversation. But do you really think your friends and family, beyond a certain point, are going to pay the mortgage for you, your wife, your husband, your kids? They're not going to do it, because most people can't afford to do that. So even with the best intention, people will help you as best they can, but no one's going to pay your mortgage for you. So I'm not here to try to convince anyone to take out protection. But what I will say is, as responsible mortgage brokers, we're going to make sure and have a meaningful and serious conversation with you to find out what you have in place, that we can put something in place to protect you and your family. If you choose not to take it, it doesn't impact your ability to get the mortgage. But we know, and I know, I can sleep well at night knowing that I had the conversation. A lot of people think that wills are just for rich people, not thinking that some people are rich because of wills. So if you have a heartbeat, if you are a human being, you should have a will. A will is a very important part of being an adult. And as I said to my wife when we first got married, for the most part, we only have to do it once. So let's get a will in place. If and when we have children, we can always update it and revise it. But a will is very important as part of getting your mortgage. Most brokers will refer you over to someone that can talk you through estate planning and wills and everything that goes along with just being a responsible adult. So don't think that your broker is just trying to sell you stuff. They're trying to protect you. As someone who worked in collections and pre-litigation and foreclosures for over a decade, one of the worst feelings is going to someone's house and having that last conversation before we start foreclosure proceedings. The bank has loaned you the money in good faith. Your broker has given you options to be able to protect your mortgage in the event of death, sickness, or accident. If you choose not to have them, then nobody can be held responsible for that other than you. And the next thing that I would say to anybody who is watching this is, if you already have a will in place, review your will. And if you've read my book, or if you hear me speak, or you've seen me speak at an event, I always say, what? Let everybody know what everybody knows. Let everybody know what everybody knows. What I mean by that is, if you have a will and nobody knows where it is, or your one daughter knows and your other son doesn't know, it can cause problems. So let everybody know what everybody knows. Quite often we don't do that because there's something called will revenge, where people in life have these hidden animosity towards people, and they're like, I'll stick it to them. When I die, they'll find out that I didn't like them because I don't leave them anything. I guess sometimes just be brave. Maybe you should mend those relationships. But even if you're not planning on mending those relationships, let everybody know what everybody knows. Store your important documents in a place where everybody knows where it is, or the key people know where it is. Don't think like a lot of West Indian people think, and a lot of, I'd say, younger or immature people think, oh, my wife, my husband, my kids, or whoever, they're talking to me about wills because they want me to die. Like I say to all my clients, we're all going to die. And not having a will or talking about a will is not going to make it any faster or slower. But what it will do is, for the people that are left behind, it will make their lives easier. And what a great legacy to leave behind. Someone that was a good person in life and responsible enough to make sure that they left the right provisions for future generations. As I said, I have a book. It's called A Mortgage is a Really Big Loan. It goes through how to get a mortgage. It goes through the process. Make sure you check it out. But it's not just about mortgages. This book is written for regular people like us. It's written in a conversational way. It's written that you can understand basic concepts, that when you go and speak to a mortgage broker, you can understand the concepts. But when you do speak to your mortgage broker, if you don't understand what's being discussed, always make sure you ask questions. It's going to be one of the biggest purchases of your life. So make sure that you have the discussion. Make sure that you feel comfortable. If you have to ask the question several times, then ask the question several times. Don't move on until you understand. There's no shame in not knowing. I think they said like 47% of people with mortgages, so this is people that already have mortgages, don't understand how mortgages work. That's why I do these videos. So I hope that this has been helpful. Make sure that you share. Make sure that you comment. If you're a mortgage broker and I've said something that you don't agree with, I welcome your comments. But if you're a first-time buyer or someone on a skilled worker visa, hopefully this book will give you the advice and information you need to be more confident as you proceed. And if you're just a home buyer who's looking for a mortgage broker and just wants to have a conversation or a free affordability assessment or capacity report, make sure that you reach out. My name is Anthony Lindsay. I've been in finance for over 30 years. I've done everything from wealth management to debt collection. I'm here to make sure that you and your family get the right mortgage based on the right criteria, based on your budget, your needs, and your goals. Thanks for watching, and make sure, as I said, you like, you share, you comment, and my information is in the description, and you can connect with me on LinkedIn. I'm always available if you're doing events and you need someone to speak about financial literacy. I do a lot in the community. I do a lot with young people because we must equip them with the information that someone